Picture this. After decades of sacrifice, you finally sell your company for $100 million. You call your trusted accountant, expecting congratulations and a quick tax chat. Instead, there's a long, uneasy silence. Then, panic. You closed the deal already? The devastating news hits. You're facing a $50 million tax bill because you didn't plan ahead. Half your life's work, gone to taxes in an instant. This isn't a rare horror story. It happens to business owners every year. The dream of generational wealth and philanthropy is slashed, not by bad business, but by a lack of proactive planning. The wealth you thought you secured is now a fraction of what it could have been. This is the phone call no business owner ever wants to make, and it's all because of one costly, common mistake. This isn't just one person's nightmare, it's a national epidemic. Every year, thousands of business owners sell their companies, triggering one of the largest wealth transfers in history. Yet, billions are lost to taxes simply because owners don't plan ahead. Capital gains taxes, state taxes, and other levies can eat up 40% or more of a sale. Most see taxes as a passive obligation, not realizing the tax code is full of incentives for those who plan. The wealthy and large corporations use teams of specialists to minimize taxes, but the average business owner remains in the dark, treating the biggest financial event of their life like a routine tax filing. This knowledge gap costs families and communities billions every year. Don't let it cost you. Meet Frank, a classic American entrepreneur. He built precision parts from his garage into a thriving company over 30 years. Frank sacrificed, reinvested, and became a pillar of his community. Now, in his late 60s, he's offered $100 million for his business, a validation of his life's work. He dreams of securing his family's future, rewarding loyal employees, and giving back to his community. The decision to sell is emotional, but it feels right. Frank signs the letter of intent, believing the hardest part is over. But he's about to face his biggest financial challenge yet, and he doesn't even see it coming. Frank's mistake wasn't ignorance, it was timing. He called his accountant after signing the deal, expecting routine advice. But his accountant wasn't an exit planning specialist. By then, it was too late for powerful tax-saving strategies. The deal structure was set, and the IRS would see any last-minute moves as a sham. Frank's cost basis was nearly zero, so almost the entire $100 million was taxable. Federal and state taxes alone would claim nearly $40 million, with other taxes pushing the bill to $50 million. Frank was stunned. Half his legacy gone in a single transaction. The dream of a charitable foundation and generational wealth was shattered. This wasn't due to a bad deal or market crash, it was a simple mistake calling his tax advisor too late. The cost? $50 million. Timing is everything. Now imagine if Frank had started planning 5 years earlier. He assembles a team, a tax strategist, estate attorney, and wealth advisor. They design a plan, not just record history. First, they set up a charitable remainder trust. Frank donates company stock, sells it tax-free, gets an income stream, and supports his favorite causes. Next, they structure an installment sale, spreading payments and taxes over years, keeping Frank out of the highest tax bracket. They also use trusts to transfer shares to his heirs, leveraging gift tax exemptions for tax-free generational wealth. These strategies must be in place before the sale is even on the table. The result? Frank's tax bill drops from $50 million to a single-digit figure. His family, employees, and community benefit, not the IRS. Proactive planning doesn't just save money, it changes lives. The difference is night and day. The right team, the right timing, and the right strategies make all the difference. The impact of smart planning goes far beyond numbers. With $40 million saved, Frank's foundation can fund scholarships, medical research, and community projects for decades. His name becomes synonymous with lasting philanthropy, not just business success. His family's future is secure, with trusts that encourage education and responsible stewardship. Wealth becomes a tool for empowerment, not entitlement. Poor planning means a massive involuntary donation to the IRS. Smart planning lets you direct your wealth to what matters most. It transforms a tax bill into a legacy engine. Your life's work continues to create value for generations. That's the true power of tax strategy. To avoid Frank's fate, every business owner needs 5 pillars for a fortress-like exit plan. First, plan early, start years before you sell. Second, build a specialist team, tax strategist, estate attorney, and wealth manager. Third, layer strategies, combine trusts, installment sales, and gifting for maximum effect. Fourth, review and update your plan regularly. Laws, values, and goals change. Fifth, customize. No one-size-fits-all solution exists. The best plans are tailored to your unique situation and goals. Treat your exit plan as a living strategy, not a static document. Meet with your team annually to keep it current. The right plan is the highest return investment you'll ever make. Don't leave millions on the table. Build your exit on these pillars and protect your legacy. Frank's story is a wake-up call for every business owner. The sale of your company is the biggest financial event of your life. Don't let half your wealth vanish because of poor planning. The tax code gives you a choice. Accept the default, or use the rules to maximize your legacy. The difference is measured in millions. Don't wait for a buyer or retirement. Start planning now. Recognize what you don't know and seek expert help. The longer you wait, the fewer options you have. Your legacy is in your hands. Protect your life's work and maximize your exit. The time to act is now. Thanks for watching. If you found this valuable, please like and subscribe for more insights. Want to know if you're truly prepared? Click the link in the comments to take our free diagnostic test.